I was convinced the market was wrong about inflation, that it wasn't deflation, but inflation, that COVID wasn't a deflationary event, but an inflationary event, not by its nature, but based on the way we responded to it by showering the country with stimulus money, running this QE program, while at the same time telling people to stop working. I knew it was the most toxic combination of an inflationary, monetary, and fiscal policy I had ever seen. And so I wanted to own something that I thought would do very well when everybody was surprised by how much inflation there was. Well, I got that part right. Inflation did shock the hell out of everybody. The numbers are far higher than anybody could have believed. I'm certainly vindicated on the fact that it's not transitory. I said the Fed was lying when it first claimed it was transitory. In fact, I have proof that before they even came up with a transitory excuse, I was predicting that when inflation initially reared its head, first it would be dismissed, and then they would claim it would be transitory. And so all this has come true. But what the markets still don't get is the Fed's not really going to fight inflation. I mean, it's pretending it's going to fight inflation, and that is the problem. Because all the people who were surprised by inflation they didn't expect now expect the Fed to get rid of it. And the reason they're dumping gold and silver, and in particular these gold and silver mining stocks, it's not because they fear the inflation. They think the inflation is in the past. What they fear is this future inflation fight. The Fed is going to have this epic battle against inflation. Why do they think that? Well, because the Fed is saying that. The Fed is prepared to do whatever it takes, so it says, to bring inflation back down to 2%. And because the markets believe the Fed, they are selling these gold and silver stocks because they know it's going to take a really tight monetary policy to bring this inflation rate back down to 2%. And so the tighter they perceive future monetary policy is going to get, the more problematic everybody believes that's going to be for gold and silver, and they're selling these gold and silver stocks. What they still don't seem to understand is that even if the Fed does what it claims it's going to do with raising rates and quantitative tightening, it's still not nearly enough to bring inflation back down to 2%. In fact, it's barely going to reduce the upward trajectory, let alone bring it all the way back down to 2%. And if the Fed actually tried to get inflation back down to 2%, it would not only send the economy into recession, but it would create a financial crisis worse than 2008. The markets still don't get that. I don't know why they can't think that far ahead. All they can see is the Fed is claiming it's going to fight inflation and it's going to jack up interest rates. And so for some reason, they believe that this is going to succeed. They don't recognize that the only reason the Fed is pretending that it's going to fight inflation is because A, it doesn't think it's going to have to really fight it. It thinks it's just by pretending that that's going to do most of the work. But also, they assume the U.S. economy is so strong that any rate hikes that they're forced to deliver, well, the markets will just shrug them off because the economy can take it because it's so super strong, when in fact we may already be in recession. And so when the underlying weakness of the U.S. economy is finally laid bare, then all this tough talk about fighting inflation is going to go away, because then the Fed is going to concentrate on its other mandate, which is the economy, which is employment. Because once people start losing their jobs in this recession, then the Fed is going to forget about inflation and start focusing on employment. For some reason, the markets aren't there yet. So whenever the markets get surprised by this hotter than expected inflation number, all they think about is now the Fed is going to have to fight harder. It never occurs to them that it means the Fed has already lost the fight and it's going to surrender, and that this inflation is going to push the economy into recession, and that recession is going to usher in an even larger round of inflation as the Fed returns to an even more inflationary policy to stimulate the economy. Look, if the Fed really were serious about fighting inflation, it would already be doing it. I've said this many times. It wouldn't just be talking about fighting inflation. It would be fighting it right now. Look at the balance sheet numbers that came out on Thursday. The balance sheet expanded by another 2%. Now, if the Fed has acknowledged that the balance sheet is already too big and it needs to be reduced, why are they still making it bigger? Yes, technically they're not going to start quantitative tightening until June, but here we are in May and the balance sheet is still expanding. All of these FOMC board members will acknowledge that we have a real inflation problem and they are going to work diligently and aggressively to bring inflation under control. It's an emergency. We have an inflation emergency, and the Fed needs to act. Well, if so, why are they dragging their feet? Why are they acting so slowly? Why wait? Just shrink the balance sheet right now. In fact, interest rates are still below 1%. If you think interest rates should be 2 or 3%, and you recognize that you're behind the curve and that you're too low because you underestimated inflation, the Fed went all these months believing inflation was transitory, and because they thought it was transitory, they left interest rates at zero. Well, by the time they found out they were wrong, they also knew that interest rates were much too low. So why not immediately adjust them? Why do they have to move in 50 basis point increments? And why do they have to space out their rate hikes by 6 weeks? If you think interest rates should be 3% and they're 1%, what's stopping you from immediately going from 1% to 3%? There's no rules that say you can't do that. In fact, look at how the Fed reacted to the COVID emergency. The Fed initially cut interest rates by 50 basis points. They went from 1.5% to 1%. Now, 12 days later, they didn't wait for a meeting. They immediately slashed interest rates again from 1% all the way to zero. So they went 100 basis points all at once, and not 6 weeks later, but 12 days later. Why did the Fed move so quickly? Because there was a COVID emergency. The Fed thought that interest rates needed to be at zero quickly. It didn't want to wait until the next meeting to cut them or 2 more meetings. So it just went directly to 1 and did a 100 basis point cut. Well, if the Fed could act like that when the emergency is we need stimulus, why can't they act the same way when the emergency is we've got too much stimulus, we got to get rid of it? When they're trying to fight off recession, they're willing to act quickly and make huge moves. But when they're trying to fight inflation, they're not. All of a sudden, they have to go slowly. They can't shock the markets. Well, why not? Maybe the markets need shocking. If interest rates are too low, the longer they're left too low, the more damage they do. Look what happened with QE. When the Federal Reserve cut interest rates from 1% to zero, it immediately launched a massive QE program that started right away. They didn't say, hey, we're going to phase it in. We're going to start it in a couple of months. No, they went and they just immediately started doing it. So when it comes time to liquor up the punch bowl, yeah, they're there with a big truck dumping all kinds of alcohol into that punch bowl. When it comes to removing that punch bowl, they're very slow. They're very reluctant. Maybe they're slowly draining some of the alcohol out of the punch bowl, but they're still leaving a lot of it in there. The fact of the matter is, you got to look at what the Fed is doing, not what the Fed is saying. They have to talk tough. And remember, I've talked about this. It's the opposite of the Teddy Roosevelt strategy. They don't have a stick. They can't really fight inflation. So they have to talk tough as if they're going to fight it because they're hoping their tough talk will do the fighting for them. And they won't have to reveal the fact that they don't really have a stick. Yes, they may be able to get a couple of more small rate hikes under their belt before the entire economy implodes. But you know what? They're not going to admit that it was their rate hikes that did it. They're going to come up with something else to blame the next recession on. They're not going to accept responsibility. They're not going to say we had a bubble economy and that economy couldn't survive without the air. They're going to come up with another excuse. Just like they're blaming inflation on Putin or on COVID, they're going to blame this next recession on something else.